I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 3rd of March 2024. I'm gonna be doing the full weekly review. This time gonna be including also gold, which is also known as XAU USD, crude oil, and Bitcoin. Now regarding Bitcoin, I'm gonna be just viewing it on the monthly chart because it is where the cleanest and the most smooth price action is going to be found regarding crypto, or to be specific, Bitcoin. So now starting with the DXY, here we have an inside week. Price have printed an inside week where the high is lower than previous week's high and the low is higher than previous week's low. So this shows that smart money are accumulating positions at that area, and we can potentially see price soon break out of this area, either to the downside or to the upside. But you can see how price is respecting the rejection block right there. So the rejection block here is being respected, the bearish rejection block, and the low of the weekly and the monthly fair value gap is being treated as resistance. After we've been trading to it, we filled it here, we traded to the bearish order block, and now trading down lower. I'm looking at this low, and below this low and this low we have this fair value gap. Going to the daily time frame chart, you can see we have the bearish breaker here. This is a potential bearish breaker. We have a high, low, higher, lower, low. I mentioned in the last weekly review that I don't really prefer this bearish breaker. Why? Because the displacement or the market structure shift to the downside wasn't really strong and aggressive to the downside. You can see a lot of wicks here trying to break down, but it's not being able to. So there is not a strong price action or strong movement to the downside. There is some kind of indecisiveness, some kind of the price is just being held in consolidation, or also known as the holding pattern. So you can see how price traded back up, retraced up to the weekly fair value gap and the monthly fair value gap, traded to the potential bearish breaker and started breaking down lower. You can see on Friday we took Wednesday's high and we started breaking down lower. So we're still looking, I'm still expecting some kind of lower prices here after we took this price at liquidity and filled this fair value gap. Now price can actually resume going up higher, and this could be a bullish breaker. And this low would just be ICT bullish pattern number one, and we will be running up higher to attack this buy side liquidity and those relative equal highs. But because we've been pretty much running up higher for about 2 to 3 months, I'll be expecting some kind of break of market structure. Now this is on the high time frame. It's called break of market structure to the downside, attacking the lows. This is liquidity. Also, if you refer to the first weekly review of this year, I mentioned on the really higher high time frame on the XY, the outlook of this year of why I'm expecting lower prices. So I think that's gonna be pretty much it for the XY. Going to ES. Here I'm viewing the continuous contract, and I'm also viewing the weekly time frame chart. You can see that recently we've just been printing higher prices, although we have attacked the all-time high, which comes at the 50.29 and a quarter. So that's the all-time high. If you go to your charts and you plot that level or that price level, you'll see that this is the all-time high. We attacked the all-time high right there, and we kept pressing and attacking higher prices, although we've attacked the all-time high. So this doesn't mean that if we've attacked the all-time high, we should retrace and start trading down lower. No, that's not the case. We can still see higher prices because we're still in a buy program, and that's the case here. We've seen a high prices here. So we're still in in the buy program. We don't try to pick the top here, the buy program. I mentioned that a lot in the past, and I'm gonna be mentioning it again here. In a buy program, we never try to pick the top, and in a sell program, we never try to pick the bottom. So you stick with the program that is currently playing, and you just look for signals that are aligned or in in align with with that program on the high time frame. So in this case on ES, our program is buy program, so we keep looking for signals to buy this index. So going to the daily time frame, you can see I've showed you the in the last week review the SMT here with NQ. I'll show it to you later, where we have a lower low here on NQ, but we have a higher low on ES. This creates or forms a bullish mitigation block on ES and a bullish breaker on NQ. Price retraced. It didn't reach the bullish mitigation block, but it reached the fair value gap. You can see how it walked to the fair value gap. It was very close from the consequent encroachment of that fair value gap, and then it tried up higher, took the buy side liquidity. Just as I've mentioned, as I called it out in the last weekly review, this is not something that I edited it, or it's not something that it was printed already. No, it is something that I called last week, and it did happen this week. So as you can see, we retraced, walked inside the fair value gap, took some orders, and then we rolled up higher, took this buy side liquidity, which is Friday's high of last week. So we're still sticking to higher prices unless we start breaking down lower and we see some lower prices break of market structure below this low or below these lows, then we'll start considering some lower prices or the starting of a sell program, which is the quarterly shift. So that's gonna be pretty much it for ES. Going to NQ, I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see we're continuously seeing higher prices on NQ. So it's not pretty much that's not nothing different from ES or what I'm going to be showing on Dow, although there's some kind of deviation here on Dow that I'm going to be showing it to you later. Going to the daily time frame chart, you can see here's the difference or the SMT that happened between NQ and ES, where ES has posted or printed a higher low, NQ has printed a lower low. You can see that lower low means that's a bullish breaker. That's a bullish breaker price. Rallied up higher this Friday. Monday, it was pretty much an indecisive day. Tuesday, Wednesday, Thursday, it was trading into the fair value gap and the bullish breaker. Touched the constant encroachment of that fair value gap. Thursday's low of the week, and then Friday attacks the buy side liquidity right there, the relative equal highs, and creates the high of the week. So Thursday was the low of the week, and Friday was the high of the week. This is it's very important to note down the weekly profiles of what day of the week did form the high and what day of the week did form the low. And this depends if you're in a sell program or on a buy program. So we're still looking for high prices. You see, this is a bullish breaker. Price traded the bullish breaker and the fair value gap and attack the buy side liquidity. So we're sticking to the high prices unless we start breaking down lower below this low and we see some kind of an important break of market structure to the downside and the start of a sell program, or also known as the quarterly shift. So that's gonna be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, what's different here on Dow is that this is an inside week where the high is lower than previous week's high and the low is higher than previous week's low. This means that smart money are trying to accumulate this index right there by printing this kind of an inside week or the inside candle. You may ask, why is that? Why would they be accumulating? Because price has kept the buy side liquidity and the sell side liquidity intact. It didn't attack the buy side liquidity, nor did it attack the sell side liquidity. So it kept those liquidity pools in play, and they just traded inside the range of previous week's trading range to kind of build interest and try to engineer more liquidity inside that trade inside that range, trying to print some retail concepts and retail patterns to kind of prime traders. It's called priming. Prime the traders or the retail traders to be specific into putting some stupid positions on. Just it will just be printing those concepts and those patterns into tricking the retail traders that they're catching the bottom or they're catching the top, and they will just be trading inside that small range out of this swing that we traded. So that whole swing we traded, now they're trying to make their fortune, they're trying to make their career inside this week, inside this candle, which is which is didn't really take the previous week's high, nor did it take the previous week's low. So they're pretty much stuck inside that range. And they think that all of the opportunities are gonna be in that trading week, which is absolutely wrong. For the market, after it has traded a lot to the upside recently, it has to enter some kind of a state of a consolidation, or also known as the holding pattern, to engineer interest so that the retail or the mass will be seeing the news. Oh, Dow is now up to the all-time high. It's keep printing higher highs. It keep printing higher prices. So once you see then those news, or when you hear your friends telling you that, oh, it's the best time to, let's say, invest in this index because look at the last 3 months return. That's phenomenal. So once you hear those news, that's the best time to be selling because, or at least accumulating short positions, because at that time when you hear the news, the smart money actually are trying to use the media to sell their positions. But how are they going to be selling their positions? By telling the mass, or telling the retail traders, or by telling everyone around the world that it's the best time to buy this index. And when they buy their index, it's actually buying from the smart money who they're trying to sell. So if smart money has bought or have bought the index, or this index, they've bought and they have accumulated below this low, so they bought right there. They need to sell those shares. They need to sell those positions, the positions that they accumulated. All right, they have longs. They need to sell those, and who's gonna buy those from them? The mass or the retail traders who are gonna be seeing the news right there, seeing, oh, it's the best time to invest. Look at the returns over the last 3 months. Look at the returns over the last 1 year, and they're gonna be tricked into those fake or false accusations that it's the best time to be investing in this index because they don't have enough understanding of the underpinnings of the market. So they will be buying our positions that we've accumulated long ago, mid-October to early November. So this is pretty much how the market makers be making the moves and how they book price pretty much. So going to the daily time frame, Dow, this is a very important here on Dow. We didn't make it to this high. So this buy side liquidity on NQ and on ES, if you go back, you'll see that we've attacked this buy side liquidity on both ES and NQ. But on Dow, it was pretty much, now Dow is the only one that went deeper. It almost filled that fair value gap. On NQ, it pretty much reached to the consequent quadrant of that fair value gap. On ES, it didn't barely touch the consequent quadrant of that fair value gap. So you can see how Dow almost completely filled that fair value gap, and it was a bit heavy to reach that buy side liquidity. So it didn't reach the buy side liquidity, and we have a potential SMT here to attack lower prices. Now, this doesn't mean that this is gonna be the top. I'm not saying that at all. But what I'm saying is, this is a potential area to be monitoring uh, an SMT. If we form this high, let's say Monday forms a low below this high, so it forms a high that is lower than this high. This will be forming a high because we only need three candles to form the pattern of a high that has a lower high to the right of it, and a lower high to the left of it. So these three candles will be forming the high. If on Monday we form a high, and on Tuesday or the rest of the week we break this low, this will be very influential because I'm going to be monitoring it on daily basis, or actually on the hourly basis, and we'll seeing how it is doing in gear with NQ and with ES, and I'll be monitoring and tracking, trying to understand, are they trying to now drive price to the downside and start the sell program, or they're just trying to engineer some liquidity before actually attacking higher prices. So I think that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. Now you can notice how last week, the low of the last week, now we can also notice that we have an inside week candle. So last week it has formed a high that is lower than previous week's high, and a low that is higher than previous week's low. So it's an inside trade, it's an inside candle or inside week where smart money are accumulating positions right there. You can see how the low of that week or this week we formed the low at the low of the inversion Fibonacci gap. So price is pretty much respecting the inversion Fibonacci gap as kind of support to send price higher towards the buy side liquidity. So if I see this that price is being respected here at the inversion Fibonacci gap, it's pretty much that we're going to be trading and attacking the higher prices. I'm aiming for this Fibonacci gap. You can see between this candle's low and this candle's high, we have a small area that was inefficient. Now from there, everything is efficient. You can see that there's not pretty much no favor gap. There was just this favor gap and we closed above it. And next week, which is this week, we traded and treated it as support. And we're expecting price to attack higher prices, reach to the favor gap that was left inefficient. After that, we have the rejection block, the consequent the premium wick, and we have the buy side liquidity. After that, we have the major buy side liquidity right there. Going to the daily time frame chart, you can see we have this is an SMT with GU. I'm gonna be showing it. I'm gonna be showing you GU later on, where we have formed a higher low, whereas a lower low on EU. So we have a potential bullish breaker, price traded down lower, bullish breaker, and the inverted favor gap. Got some orders there, and we can potentially expect some kind of a potential or a futuristic bullish order block right there. If we attack this high, this would be a bullish order block. These three consecutive down close candles would be treated and used as a bullish order block. We'll be aiming at this high and this high. So that's gonna be pretty much it for EU. I'm still looking for higher prices. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see how the low traded to the bullish rejection block right there, seeing some reaction there, and prices being treated as support there. Also the body of the candle, you can see last week, it's respecting the inversion favor gap, which is the orange shaded area right there between this candle's low and this candle's high. So the body is respecting that area and not closing below it. Also, you can notice that we have an inside week, just we've mentioned on EU and on the XY, we have an inside week where the high is lower than previous week's high and the low is higher than previous week's low. So smart money are trying to accumulate positions right there, and we can potentially see price attack the relative equal highs. I really like this area. A lot of buy stops are residing at these buy stops, and also this buy side liquidity. What my main concern is these relative equal highs, pretty much those relative four highs right there. This is what I'm looking at, and I don't think smart money or the market makers are gonna be keeping these intact and they're gonna be driving price lower. I believe a lot of retail traders, a lot of their ideas, their stop loss is residing just above these highs. So price is just gonna be driving up towards these highs, take out the buy stops and potentially this high, and then we're gonna be deciding if price wants to continue depending on the strength of the higher prices after that high, if it want to reach to this buy side liquidity or not. Going to the daily time frame, this is the SMT that I've mentioned. We have the higher low, which means this is a bullish mitigation block. Price has been trading inside the bullish mitigation block, and you can see how price traded down lower all the way to fill this inefficiency between this candle's low and this candle's high, which is the inversion favor gap. After it has filled it, a little bit of a mohawk right there, just below the inversion favor gap, to make sure that all the orders are being filled for the smart money or for the market makers. And then from there, you're going to be driving price towards the buy side liquidity. We have these relative equal highs that I'm mentioning. Those relative equal highs, those three highs that I've been calling out. I want to see price take them out and this high. This is what I'm thinking. I'm thinking of price driving up higher. We also have future potential future bullish order block right there that can be used as a bullish order block after we trade above this high. So that's gonna be pretty much it for pound USD, or also known as the cable. Going to gold. Here I'm viewing the weekly time frame chart. As you can see, now I was looking for lower prices actually on gold since we've attacked the all-time high. But this doesn't mean that after we're attacking the buy side liquidity or the all-time high that we're gonna be seeing lower prices. I was just hoping for price to take out the sell side liquidity before actually resuming and going up higher for this buy side liquidity. Nevertheless, we formed a low. We took that low and we broke this high, so this forms a potential bullish breaker right there. Um, After that, we can see potential retracement to that bullish breaker and a continuation to the upside, attacking this buy side liquidity. Now, would be a target is the consequence to that premium wick. This would be a target that you'll be aiming at because this is to be considered a long premium wick. So a long premium wick, you would be aiming at the consequent encouragement of that premium wick, which is that level right there that I've annotated, and also the high. So these are the two levels that I'm aiming at. Going to the daily time frame chart, you can see that relative equal highs swept. You have a low, high, lower low, high and high. These about four consecutive up close candles. These would be the bullish breaker. We also have a potential fair value gap here. So next week, if we see any retracement towards that bullish breaker, we can be buying that and aiming at this buy side liquidity. We will be aiming at the quadrant, the 75% quadrant, and the buy side liquidity, which is the major buy side liquidity, the all-time high buy side liquidity. These would be my targets for high prices. So I would just also add one more thing to gold. It is known to be the highest manipulated asset across all markets. So when you're trading in general, gold is to be considered the highest manipulated market across all the markets or all asset classes that you're trying to trade. So alongside Forex market, but the highest manipulated market is gold. Then comes Forex market, and the least manipulated or the easiest market to address the manipulation is going to be the indices. ES, NQ, and Dow. You can easily address and point out what is the manipulation and which is the real distribution. But on gold and forex market, it can be sometimes tricky to actually decide or figure out what swing is going to be the manipulation to trick traders into getting in that trade. So that's going to be pretty much it for gold. Going to crude oil, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see last month and the month before that, January and February, I mentioned and I was calling for higher prices. We have the bullish order block right there. Why I'm using the high, not using the body, because we have a fair value gap. So price was trading and accumulating positions at the bullish order block right there, and then we've seen some higher prices. I was calling for higher prices. We attacked the buy side liquidity and we reached to the relative equal highs and the fair value gap right there. Just above that, because we already attacked the buy side liquidity and the fair value gap, we have the volume balance right there, and we have the major buy side liquidity right there. This buy side liquidity and this buy side liquidity, which these are gonna be the buy side liquidity that I'm gonna be aiming at, and just below these major buy side liquidities, I'm aiming at this volume imbalance. Going to the daily time frame chart, you can see this is the volume imbalance that I'm aiming at, and just above that volume imbalance we have actually this fair value gap between this candle's high and this candle's low. So this would be also an area to hunt some positions out. Also we have this liquidity void where there was no trading whatsoever between this candle's high and this candle's low, so you can also take some profits if you did take the trade here at this liquidity void. So still looking for high prices. This is a buy program. We're not trying to catch reversals right there or right here. We're just sticking to the program that we're trading, and we're just sticking to it and trading and taking signals in that direction. So still looking for higher prices. I mentioned that. Also, you can notice one more thing here on the weekly time frame chart. You can see last week we retraced. We used the buy side liquidity as support. You can see how it traded right there, and then it jumped up higher and attacked the buy side liquidity, the relative equal highs and the fair value gap. We can see some kind of a consolidation here and then attack the volume imbalance, the liquidity void, and the buy side liquidity and the major buy side liquidity. So that's gonna be pretty much it for crude oil. Going to Bitcoin. Here I'm viewing the monthly time frame chart. You can see 2 months ago I mentioned that we're likely to see price attack the buy side liquidity and reach to this fair value gap. We did reach to it. We've seen a retracement, and then last month here in February we've seen an expansion to the upside, attacking the rejection block right there. So I'm monitoring the rejection block, the constant encroachment of that premium wick, and the buy side liquidity. We're pushing towards the all-time high buy side liquidity right there, which is the major buy side liquidity. We're still looking for high prices on Bitcoin. I just want to mention also that on April of this year, we have the halving, which is an event that happens on Bitcoin that can, historically, it's known that it will be showing or printing as a result higher prices. So it's to keep an eye on that. So that's gonna be pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.